Hey guys, I just wanted to do a little video from infographic from visualcapitalist.com. That's visualcapitalist.com. They make great infographics, and I'm kind of a graphic learner. So basically what they do on the site is they look at, through visualizations, these squares equal 100 billion in market cap. So market cap is just the capitalization, which just means the value of it. So they're comparing the world's money and markets through these visualizations. So just to start, I wanted to show you silver, cryptocurrencies, and then gold, these sizes versus how big the stock market is. This is the entire stock market. Global money supply is this large, and then global debt is this large. It's very large, but global debt, don't let this scare you, because these are like bonds and things like that kind of keep markets going too, as well as so look at the real estate here. And then I just want to show you a brief overview first before I get into this. And then derivatives are what they call it is a derivative is a contract between two or more parties that derives its value from the performance of an underlying asset, index, or entity. So derivatives, I mean, that's what they are. They are like bets on the performance of underlying assets and their investments. But look how large derivatives are, and they're kind of like difficult to understand, but like they're, derivatives such as the Chicago Mercantile Exchange, where they trade, over the counter with, gold or commodities, futures. They even do like Bitcoin. And then look at the collateralized debt obligations, default swaps. So I don't want to get too into this yet. Let's just look at this as a whole. Look at how large derivatives are. So, and then it's funny because they show how big Bitcoin is. It's very small, as is silver. So that's why silver, as a speculative play, like there's not a lot of downside because it's such a small market anyways. And I think it's undervalued in general. And this is just based on an outlook based on this visualization of the cap rates. I mean, not the cap rates, sorry, the capitalization, the market value of these different markets. So this silver market is very tiny. That's why like small groups can corner the market like they did with the Hunt brothers, or Warren Buffett did this back in the 80s. It shows that this is like less than 100 billion. The value of above ground silver stocks is 17 billion. Funny thing is, that's at $17 an ounce. Right now it's at about 18, 19 an ounce. So we're at about 18 billion. That's how quickly, 19 billion. That's how quickly this can change. Cryptocurrency, you can look at Bitcoin, 100 billion. Bitcoin is a larger market cap than silver. Look at the rest of cryptos. This is based on, I think, a while ago. I think this cryptocurrency space might be worth even less, because this was back in 2017, October 2017. October 2017, I think Bitcoin was probably worth about 12, 13,000. Don't hold me to that. I was buying Bitcoin at that time, but I think it's worth less. I know that the shit coins or altcoins are worth a lot less. Ethereum's pretty solid, but it's definitely worth less than it was at that time. Look at the biggest companies, their size, their market capitalization based on, 100 billion per one of these units. So look at the richest people, how much, so Bill Gates could actually corner the silver market. That is, if people were willing to sell. And I guess if he started buying up all the silver, I would think that the silver price would go up. I don't really know. I think it's based on supply and demand. California is a large economy. Look, it's got that much GDP, 2.9 trillion. It's insane, the amount of GDP that one state has. Federal Reserve balance sheet, we're at 4.5 trillion. But what scares me is between 2008 and 14, we went up that much. Like that much was added, 3.5 trillion during quantitative easing. So this shows some unsustainability with our Federal Reserve balance sheet. Currency, like look at the amount of banknotes and coins that are, in these. This is not the monetary supply. Monetary supply is down here. but this is the currency supply. If anyone really knows the in-depth difference, let me know down below. I don't know everything when it comes to investing and when it comes to finances, but I try. So, but if anyone wants to discuss it below, just leave a comment down below. And I want to remind everyone, please rate and subscribe, because that helps me out. I don't do this for money. I just do this just to share some knowledge with y'all. So please create a discussion below, because it is nice to talk about these things. And by the way, it's at visualcapitalist.com. Here's the gold amount. Look at the size of the gold market. It's 7.7 trillion. And this could go to, like, I think it might go to 10 or 20 trillion because banks are buying it. And this was kind of interesting because look at the amount that's held by central banks versus private investment. And I think this private investment, a lot of this is like hedge funds and stuff, but there must be like a lot of individuals and companies and miners and stuff that are holding a lot of gold. But look at the amount of jewelry. That's like probably not going to be changed, because this is individuals and jewelry companies that own this much, compared to how, look, the silver market, it's so tiny. But because it's so tiny, that means I think it has more upside potential. I mean, when people discover silver, it's going to be more volatile, and that's why silver bounces up and down. You see it, go up 5% in a day, 3% down, 2% up. It's as do cryptocurrencies. And then down below they're talking about derivatives and stuff. Derivatives are where people place bets on things. That's my understanding of the derivatives. I might be wrong, but they basically place bets. If you look all the way down here, derivatives. What is a derivative? Again, a derivative is a contract between two or more parties that derives its value from the performance of an underlying asset, index, or entity. See, they bet on these futures contracts, forward contracts. It's just this whole mess of things. So that's how they manipulate, and that's how things are. This is like how global finances work. So it's a pro, it's a con. Look at it as you will, and then and make your own decision when you do invest. This shows commodity traded futures, blah blah. Yeah, collateralized. This shows the 2008 financial crisis. It got out of hand. What else? Views on derivatives. Many finance professors consider derivatives to be zero-sum trades. In other words, there is a winner and a loser on each side of the bet. However, other experts warn that the massive size of the derivatives market could contain significant risk and consequences to global markets. That's interesting. But it should be zero-sum. This is like the buy-sell. If you look at those charts where it shows red is the sells and the greens are the buys, there's constantly this back and forth bulls and bears fighting these markets. So, you hold the silver, guys. If you're a stacker, you hold that silver, but it's being bet on in these marketplaces constantly, like the CME, the Chicago Mercantile Exchange, for instance. And then there's like Hong Kong has some, New York has some, and they're constantly betting on these things. And, this is just part of finances, guys. I try not to be too, I try not to get too overwhelmed by this stuff, because it's kind of like, this can be scary to some people. It's okay to say that, you're scared of all this stuff, but that doesn't mean you should be out of investments. I think that you should hold a bunch of different things. I hold bonds, I hold stocks, I hold real estate, I hold gold, I hold silver. Some are in ETFs, some are in all sorts of different things. But I diversify and try to not let fear get in the way of your decisions. So views on derivatives, blah blah blah. So yeah, I just want to show derivatives again. It's just kind of crazy how big the market is for derivatives. Look at the size of global real estate. Real estate is where I have most of my money invested in, about 85%. I actually just purchased more real estate recently, but I bought it undervalued. I buy it like 20-30% under market value. People, they don't understand real estate. So when I say I do real estate, they go, oh, whoa, real estate, it's so overpriced. It's like, calm down. I know what I'm doing when it comes to real estate. I manage it. I do construction on it. I raise rents on it. I reevaluate it. I get it reappraised. I pull money in and out. I do this with hundreds of thousands of dollars, and it's actually a very small business. If I was on this map, I'd be a little speck of micro dust, and it's very controllable to me because I've been doing it for 20 years. that's a side note. But yeah, global real estate is huge. Like it's 217 trillion. 21% of the world's total residential asset value is in North America. That's crazy because 21% of the value is right here. 5% of the population lives here. So that's kind of interesting. Why is this so valued? And, will this go down? Will it go up? Who knows? I make income on my properties. I don't want to get into a debate, but a lot of people they'll just send a comment to me about how real estate's overvalued, and it just kind of gets me annoyed because what type of real estate? There's commercial, there's single family houses, there's land, there's agricultural, there's real estate that's cash flowing, and there's real estate that's not cash flowing. And how much of a loan do you have on it? If your cap rate on a property is making you 6% and your loan is 3%, you're making probably 3% at least on $1 million. So you're making 30 grand. So it's whatever, so, or sorry, you're making more than 30 grand. You could be making 60 grand. It depends on the amount of your loan. It's complicated, guys. Just trust me. Yeah, this is kind of interesting. So look at the global debt. This is kind of interesting. I should be going in order, but I'm kind of bouncing back and forth. I'm a little ADD, guys. So Fed balance sheet 3.5. Okay, currency, we're back on gold. Gold is at 7.7 trillion. This could go up a lot, especially with uncertainty in the markets. This could go down. Stock market. I think in the long run, this will be going up. United States equities will be going up. China will be going up drastically. In 10, 20 years, 30 years, this red China could be as big as the US. So that could happen. Global money supply, 36.8 trillion. This is just interesting how much broad money there is, 90 trillion. I don't understand all this in depth. It's just interesting to see all the different markets, guys. But this was interesting, is the global debt. So look at the increase in the global debt recently. 70 trillion of the world's debt, 33% of it was added in the last decade alone. That's insane, guys. It's because of that last global financial crisis that we had in 2008. So you want to ask yourself, are we too fearful because 08 was just in the rear view mirror, or should we be fearful because we got out of 08 with, all these more debt? We basically we increased our debt. So I think we're either going to go to a grind like stagflation, or we're going to have some sort of recession or crisis pretty soon. We could just have a slowdown in growth, but to me it's probably going to be some sort of small recession, or 1 or 2 year small recession, not like 08, and then it could be as big as 08, but probably not. I don't think real estate will be hit as hard, at least in my market. My markets are strong, but I think gold will be going up a lot because of this debt that has occurred in the last few years. Because gold and silver are both insurance, but especially gold, because this is the strength of gold. Look how many people are value gold. Look at that market compared to the market of silver. But that being said, I think silver is very volatile and will be going up a lot more and beat gold in returns pretty soon. So global debt. Look at the global debt in China. It's sky high compared to 2011. Look what happened. All this debt was created. This doesn't mean, so when I say these things, I think a lot of people react by saying, let's get out of China. I'm still investing in Chinese stocks. I'm still investing in gold. When I hear that gold might have a slight correction, it's okay to have these things occur. Don't react too quickly. I'm not gonna, even real estate, it's overvalued. The cap rates are very, very low. Cap rates are what they use to evaluate commercial real estate and multifamily real estate, not single family, but that's how they do commercial. They actually put multifamily with residential real estate, but multifamily is considered commercial by banks. So I don't know why I'm talking so much about real estate, guys. That's just my thing. But yeah, so this just shows, I would check this out, scroll up and down, do your own due diligence and think about where you should have your capital. I don't think you should put it all in gold. I think you should have some in stocks and some in perhaps China because of the growth potential, and have a lot a large amount in gold. I have about 2%, I'd say, depending on how you evaluate my real estate. Yeah, so these are just a nice visual way to look at it. All right, guys. I think I've gone kind of long here. So Metal Bum is out. And please rate, like, and subscribe. I'm going to throw this one up. All right, bye.